Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I'm Joe Nikruto, and I'm here again today with
Dan Hussey.
Dan Hussey, everyone. Today, we've got some stuff to cover. Dan, I struggled to kind of bring a key market or issue to the front today, kind of just one of those weeks. As usual, we'll be digging deep into the grain and livestock markets, especially taking a look at probably cattle and the response to last week's lower prices here this week. We do our best to educate folks on how to manage risk and navigate these types of market movements. Before we get started, we want to make sure that we tell everybody about Ted Seifert's panel profit planning series event that he is going to host Tuesday, 8 a.m. Central Standard Time. It's going to be virtual on Facebook. To me, Dan, one of the keys to this is that folks can log on, and then there will be, to my knowledge, there will be a live Q&A with Ted in this channel event. That's got to be a pretty big deal. I can't remember when the last time was he did something like this and had a live Q&A. Can you remember anything like that?
I can't remember the last time, right? You could do this digitally too, right? Because you can get online and get on there through Facebook and get on there with Ted. I can't remember the last time he's done this and been when it's not in person, I should say. So this is a great opportunity to hear what Ted has to say about this tail end of the marketing year and into harvest. And of course, get those questions ready to discuss with him what those insights could mean for you specifically.
Link for that will be in the comments. And here's the other before we start. If you're looking for timely, concise commentary on the grain markets, and Isabella, I am speaking to you. You can sign up for Karen Braun's Zaner newsletter, Karen's Context newsletter. If you are not aware, Karen has been an important part of the agricultural industry for more than a decade, and with over 85,000 followers on X, it is no exaggeration to say that people are very interested in her thoughts on the markets. Now, you can get her in-depth but easy to understand analysis straight to your inbox. Link is also below. Quick and easy to sign up. Go do that. Stay ahead of the markets and especially get the context that Karen provides daily. Dan, the whole of the agricultural community wants to know, how is your foot?
Oh, I'd say getting better. Went for a little bit of a treadmill jog run. I didn't run. It was a tread, a fast walk at most there. So getting better, man. Thanks for asking us.
Probably faster than my fastest running mile ever.
I don't think that.
With just one foot.
No.
Probably chop off one of your legs and you could hop down the street faster than I can run, I would bet.
I don't believe that for a second.
Speaking
you definitely
which,
could. Right now is the time to challenge me to a foot race. I'll give you.
I know that's right. Yeah, for sure. And now I see where the weak link is with Galuli. Right? Was that with? You're probably too young to remember that, but just a well-placed steel bar on an appendage can change the tenor of any race, I think. As always, and this is the perfect time to mention this, as always, keep in mind, everything we talk about today, futures trading does involve risk of loss and should only be considered after careful examination of your specific personal or enterprise risk profile. Dan, with today's price action, you think, well, this must have been a tough week, but not exactly, right? I mean, we're kind of hanging in there technically on some of this stuff, and I don't know if it's okay. Let's just jump right in. But especially,
let's go for it.
What I'm thinking about is beans here today, down about 12 on the day. However, opened the week at 10.43 in November beans. The high was 10.52 3/4, low 10.24. Last trade I see here, 10.25.5. That is down 20 3/4 on the week, but you look at where that places us on a daily chart, and yeah, technical damage here today, but not catastrophic, right? So
no, but certainly oversold now in that daily RSI. Certainly. Took us back down inside the range we've been in, and that rejection really off the high end of the range, and that resistance we've seen since January of this year. And it really even goes back to harvest of last year. If you really want to get down to it, there's a trend line in that 200-day and all those things. But that 1075 level that has shrunk down to now about 1064 in that last leg up, and not including this last one, which only got to 1053. So you're seeing that divergence in price as well, lower lows in each attempt to break out of that resistance and right back down to the middle of the range that we've been in. Not a great technical look, but also not like totally unexpected, right? We don't have that great news that China's going to come in and buy our harvested beans. We don't, exports are still in question. And hey, we've only heard about a bigger acreage number there from the corn crop. So I know there's a lot hanging on the hopes that maybe the bean acre shrunk in conjunction with that, but we don't have any reason for the market to get out of this range just yet. And technically speaking, we're right back in the middle where we've been.
And maybe a argument for resilience in this market, considering that we're talking about a larger soybean planting down in South America. Certainly disappointment today that you did not get any specific mention of agricultural commodities during the phone call between Presidents Trump and Xi. So far, the score on exports to China, to my knowledge, is still zero so far this year. Or if not zero, very, 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 very little. And so you could make a case, and I think today was a fine example of that, where this disappointment finally weighed on the market. But all in all, soybeans kind of hanging in there pretty well.
Yeah, they really are. And I was going to bring up the NOPA crush numbers here. If you guys give me 1 second, I will find them again. But we added to that crush some capacity down in Nebraska, which again, slowly building that, that domestic capacity and domestic demand is a good thing. I think it was 189, which year over year, there was 120% increase in some of those numbers. So it was a good crush number, and I will find that and give it to us here.
You're right.
Momentarily when I find it.
810 million bushels of beans crushed, above all trade guesses.
Perfect.
Correct. Up 20%, 13% Dan above the prior August record in 2019. So certainly
look
the
at
crush,
you, Joe, coming in with that number in the clutch.
Just luck. Certainly the crush coming in, pointing to what you just said, some increased domestic capacity. We are on the right path there. If we could just
get some see it, right?
Airline fuel going.
We're way too reliant on China, right? There is no, and I think this is to take words out of Karen's mouth, right? There is no bean demand without China. But when you look at the resilience and not only domestic demand, other things, you also have that glaring you in the face, lowest international price when you adjust the price for US dollars and what have you, lowest international price for US beans historically right now. So it makes sense for anyone, China, that wants to do what's in the best interest for themselves, taking political games out of the equation. If it's purely financial, buying US beans is the no-brainer decision. It is. So I think there's some resilience there in the idea that, okay, our beans are so cheaply priced internationally, why should they go lower, right? That's, I think, a good reason why we haven't broken down below $10 in general without China coming in with some kind of trade deals, because I think deep down at this point, we know that, hey, if and when somebody's going to buy, ours are the best opportunity to some extent, right? That can change in a heartbeat. And the closer we get to that drop dead date of not being able to get exports out, not being able to get sales booked on the balance sheet, and falling then into, unfortunately, that record bean planting in South America, which ultimately means a monster crop only that far down the pipeline, you're going to run out of that narrative, and it's going to run out of steam. So hopefully we can see this technical picture, which is a market that's really caught up right in the middle of the rain, continue until we get some brighter news.
Some discussion this morning,
not breaking down, right?
Some discussion this morning from our cohorts within the Zaner Ag Hedge family talking about, so you're going to harvest X number of bushels of beans, lots of them going into storage. That storage will remain, those beans will likely be in storage as Brazil plants. And then as we go through planting in Brazil, harvest in Brazil, planting in the US, now you've got 2025, 2026 bean crop still waiting to come to the market, while all of these, while these other two crops looking for a home as well. And this situation could get very, very heavy real quick. Can't quite see that on the chart yet, but that is a distinct possibility. And the more I thought about that, the more concerned I became.
Mm-hmm. Mm-hmm. Yeah, I definitely think there are plenty of concerns that we don't get a good, a good demand picture blooming and a change in the narrative here. But there's definitely a supply concern out there in the fields as well.
East Meal opened the week 287.10. Opened 280. We got to get some upward price action so it'd be easier to read. 288.60 was the high. 283.30 low. Last trade 284, even down 460. Meal, not no great shakes there in Meal this week. Just kind of hanging in.
Yeah, it's been a real choppy trade for the whole month of September so far. It was like August was a real banger. We took it from a low all the way up to the high, and we're just in the middle of that, right? At 272 lows there to start August off, 300 highs. We're at 284, right in the middle of that range still. And I think without any kind of clear narrative or picture in either direction for soybeans in general, meal doesn't feel any need to move.
For us technicians, that's kind of a no person's land, isn't it? I mean,
yeah, right. This is this kind of stay away.
Yeah, right in the middle.
Something else develops, and I'm that's a purely technicians type play, right? So you're a crusher, you're involved in these markets. That's not the case if you're an actual producer. But if I was to look at that chart and say, hey, Dan, give me a trade today to go long or short and make some money in beans, I would be telling you to wait until we got above or below one of two thresholds, pretty much,
to get some confirmation of market direction.
Absolutely. Right. Absolutely.
Sure.
Yeah.
East bean oil opened the week 52.06. High was 53.88. Low 50.56. Last trade I saw was 50.62, down 155 in bean oil. And some disappointment here this week in the kicking of the can down the road on some of these refinery exemptions, right?
Yeah.
I believe is the case. And certainly a complex subject for my simple brain.
Yeah, it's remarkable how quickly bean oil is able to trade like its entire range for the month as well. August, it did it in like 3 or 4 days. It did it in about a week here in middle of September. But yeah, you can see an emotionally driven market based off of news data, like hanging on the whims of a news release, right? Like every little rumor is up and down for the oil by a couple of dollars, and that's not a very healthy form of price discovery. I wouldn't say we are figuring out the healthy price or the current price for bean oil. We've got a lot of speculative interest whipping around the price right now, and that makes it very hard to trade, and also though makes it important to make hedging and risk management decisions when you need to. But from a speculative standpoint, wow, there's nothing to put no technical price action there to really hang your hat on. It's just straight up from 50 to 53.80, straight on back down. That's the month of September for bean oil.
Piece wheat opened the week at 5.22 3/4. The high was 5.35 3/4. Low 5.20 1/4. Last trade I show 5.22 1/2. That was down a whopping 1 cent, but well off the highs for the week. They're that 5.35 3/4. Wheat trying to do its part, trying to kind of get up and get going here, but a rather tepid weekly close in what could have been continued higher price action and generating maybe more enthusiasm. A lot of folks thinking that there's a short covering rally right around the corner here, but so far not yet, huh?
No, it doesn't appear that way, does it, for the wheat? Failure to get out and above those highs that we had held there into the end of August around that 535 area. And generally there was a kind of a secondary channel line down there. Not a good look. If you look to KC wheat too, I mean, it got even less love there on the rally. Markets just wheat has continually rolled over and unfortunately at technically bearish levels every time. And it doesn't seem to be rallying with enough velocity, right, to scare those bears and start a real major short covering rally in a real way yet.
Absolutely.
So get to be prepared for a new low there in wheat. I do think that this is going to turn into maybe more of a slower turning kind of bottom as it maybe does start to form one, because, hey, it is seasonally that time of the year where we may consider that. But as far as I know, there isn't really much of a narrative to be very bullish wheat on a global picture yet either. So just waiting patiently for ground piles and for demand to eat up stockpiles, and for, hey, inevitably a wheat shortage to happen somewhere in the world.
D's corn opened the week 426 and a quarter. The high was 431 and a quarter, low 422. Last trade 424. That was down about 6. Corn on a weekly chart, to me, kind of just consolidating here a little bit after the last 3, 4, 5 weeks in a row with some place to go. But here we're just kind of hanging out. Feels like, even though practically speaking, we're starting to get more traction, more anecdotal reports of the impact that this rust and gray spot and gray leaf and tar spot have had on this crop. Some talk of anywhere between 40 and 50 bushels conservatively lower in some spots. Have you been hearing this stuff as well?
Yeah, I mean, we've been, and that also, we could also, I guess, talk about beans maybe having held up somewhat based off of some tail end bad weather as well. But I absolutely been hearing a number of issues, and it really is depending on what corner of the country you look at, right? Yeah, every corner's got something to talk about, which is important, I think, to discuss. That even in some of the better parts, like in Iowa, are some of the internal conversations we're having with boots on the ground, and some of these were really great looking spots aren't so great and could be hit or miss from field to field too, right? So crop tour might have hit a couple really good spots along a line where those farmers always put on fungicide. They don't skip any regimens. But the guy next door skipped one of those things and has a 30% hit to their yield this year. That is a very real issue we're seeing, is that the problems where they are significant. And it can be in places where it wasn't necessarily just weather driven as well. There's a lot of those disease issues popping up where if application was different from field to field, you're going to see a lot of variance in yield.
Absolutely. And that is really starting to, again, get traction, and we're starting to hear about it. It seems like the corn market is maybe saying, okay, we've had some short covering because of this kind of news, and now we're waiting to see what the yield counter and combines and what kind of evidence we're going to get out of different spots in different states. Mm-hmm. They're looking for new kind of gotta feed the bull every week, right? As opposed to feeding the bear, or you got to feed the bull every day. So it's very interesting. The price action here is what appears to be kind of a wait and see attitude in corn. And we had gotten above some rather important technical levels, but there were still a few more yet to get out above. Am I right about that?
In the corn?
Mm-hmm. Mm-hmm.
Yeah, a great channel out going forward too, right? 431 highs of the month here. I'm trying to lost my chart too. Give me 1 second here, folks.
But as you look, really what I'm talking about here is that high at like 431 and a quarter in December, right? We got 429 and 3/4 this week, but that 431 and 3/4 earlier this week, 431 and a quarter. Well, you know what, Dan, that did take us out over that swing high. That kind of was what I was looking at. Maybe I was looking at the wrong chart. That swing high was 430 and a quarter, and we did get out above it. We didn't close out above it, but that's not a bad look. We did okay here this week. Really, your next big level, when that chart comes up, you're going to tell me it's what, 442 and a quarter?
439 and 3/4 is your 200-day moving average up there. We do have that gap that you want to see filled here at 432 and a quarter, which, okay, that's why you want to get out over that 431 quarter high here this week. We are kind of just banging in that 100-day moving average.
I do see that resistance.
And the 18 days coming up close here is down at 420. So you've got support. You've got reason to think that this could be a supportive area and this little bull flag and continuation higher. But you would expect to see corn head up towards that 440 area, tag that 200-day. If we can get out and above that, then now we're talking maybe going back and trying for that 480 area and the highs there from February. But this area on the chart that we're can't break above. It's the old lows from August and in December of last year, and then the lows that we kind of held above all the way until July before we finally broke down when the market succumbed to the fact that we're going to have a decent crop here, and we weren't going to get the weather issues, and it wasn't going to be the drought conditions everybody was looking for that I guess was keeping us above 440 corn. Now we're back below. But hey, look, disease and other reasons I think have brought and built that premium back into the market. And now the market is asking and wondering, hey, should we price ourselves back above? Were we back in before we had this, I'd say, good weather sell-off, and which, by the way, was started with that gap down on July 7th, and the gap I'm referring to here at 432.
So I'll tell you, a little pre-Halloween comment.
Pretty cool how we're like right back, right, with that weather scenario. Yeah, pre-Halloween comment.
Pre-Halloween comment here. This gap to me is very spooky. Bottom of that gap is 432 3/4, and we could not get there this week,
right?
With a weekly high of 431 1/4. So to me, that technically might be the biggest deal here. The fact that we have yet to get out over that gap. That makes me a little nervous for this corn market.
Very nervous, right? But a level that if it can get out over that gap, right, like it's a great thing to see. And I don't want to say that you've got nothing to worry about, but that's the goal here, folks. That's what you want to see into early next week. And then, it stay there too, right? Because you don't want to see it go up there, quickly reverse and never come back either. But
so we struggle.
But getting there at this point, I think would be a technical win for the bulls.
We struggle when we do this to find signposts that can kind of give us an indication of whether we should continue this rally. Now, I would say that on just about any measure,
funny how they move them on us usually.
Exactly. By any measure, the trend in the corn market is up, right? This is an uptrending market. But when you run into gaps like this and you're unable to get out above them, you want to be mindful that you're not seeing some sort of change in trend and an inability for the corn market to get out over that, much in the same way that we feel about certain moving averages, right? If you can't get out above the 18-day, you're not in an uptrend. And the market is doing a very good job of staying above the 18-day. And now here you are, battle lines are drawn at the top of that gap and at the 18-day moving average. So very interesting. To me, that adds high drama for the corn market into early next week. What are we going to do here? It's very interesting.
Yeah, and there's a narrative there that plays around price discovery at a time in the market where it really matters here into harvest. And I think the grain going across the scales and coming off the fields, this is where the buck stops, and no amount of pencil pushing from the USDA or any other analyst can change the fact or the reality of when the economics of the crop we produce goes to market.
Feeder cattle, after a brutal, and we're so used to seeing cattle complex weekly updates up, another week up, another week up, another week up. Seems like
nothing else to say.
Expect these things to only trade in one direction. A lot of people shell-shocked after last week's price action last week and some technical weakness in the week before. But here this week, we've managed to bounce back rather nicely and do some inside week type trading. We opened the October feeder cattle this week at 348.05. The high was 356.12.5. The low 346.95. Last trade 354.10, up 8.30 on the week. And a lot of folks expecting a rally back, maybe to some retracement levels, maybe above that. Cattle on feed here today going to give us some indication of availability. And to me, I don't see where magically they're going to add a tremendous amount of animals because there's just no place to get them from, right?
Right. Again, another place where you don't have that political narrative or that of borders opening up and all those other things. And I didn't mean to say political narrative. The narrative, right, that you can find that supply to ease a rallying market like this. Unfortunately, it ends up political because the border being closed happens to be an executive decision by powers that be.
What I wonder is who in their right mind is going to open that border and risk this being the administration of welcoming this screwworm into the United States.
It's interesting how that story has really run its course. I don't know about you, but I haven't heard it anywhere in the news recently, which I guess no news is good news with something like that, but it also could just mean that it's just contained south of the border, right? Which, again, that doesn't really do anything to change the situation north of the border. We may not have an infestation here, but we certainly don't have any animals to help quell the demand situation,
Good
supply
point.
situation, I should say.
Same story in the fats too. This week in the October feeder cattle, we should probably be looking at Dees.
Yeah, but real quick, right, with those fats, we're basically right trapped below that 18-day. I don't know if you mentioned it. They're already at the 237 area, the 55 days down at 230. You got technical reasons there. You could draw a kind of slanted bit of a head and shoulders pattern, right, where this is kind of the right shoulder formed. All it then tells you is that, hey, we get below 229 area. That's what opens the door for a broader pullback. 100 days down around 219. Old highs from June are down around 216. So that's how I think the next breakdown could occur. But for now, right, you're kind of trapped up with support, resistance at the 18-day, but you get above the 18-day, and now you can talk about a run back to highs.
Opened the week at 232.80. The high was 236.52.5 in the December live cattle. Low was 231.12.5. Closed 235.72.5. That's up 380. Both the October and the December kind of sharing the same chart formation. And the spooky line in the sand here again for me is the fact that we were unable to get back above, what is that, 237, 260, 270-ish on that 18-day. That
yeah, and I was
deal.
meaning to give October feeder cattle the technicals there, but of course just gave everyone the rundown of our December fats anyway.
Perfect, though. Perfect. Absolutely perfect.
But yeah, I mean, but the same idea on the feeder cattle chart too, though. Like you look at that 18-day, that's what we're trapped below. The 55-day is where your kind of support's coming in, and you break below those levels, you can run down to the 100-day, right? I mean, it's not a technical, doesn't take a doctorate in technical analysis to kind of see that market had a pretty clear trend up. That trend is now questioning some of these levels, and it's going to make a decision one way or the other.
I can't see fundamentally what is going to allow that to happen in terms of this market moving lower.
Go lower, sure. Well, in a big way. Excuse me, kicking over my water bottle here, and apparently I've become. My wife has made me a Stanley girl now too, by the way. But
Adorable.
Great water bottles, man. You put ice in that thing, it lasts for like 3 days. And that's so like cool. No joke. Anyway, where was I?
We're talking about December live cattle, and I can't. And this is
I was at the grocery
when markets
store
top, right? When I can't
day.
figure out how a market's going to top, it means that we're probably pretty close to a top.
Well, I was at the grocery store just yesterday, and I paid $8.99 or $8 something for a pound of ground beef. That's how we're going to do it right there. Right now, we're starting to get to. I was like, whoa, that's pretty crazy.
Did you say? But however, I will point out, you said you paid for it.
Yeah, absolutely.
Not you thought about paying for it and didn't, right? You thought about it and changed your mind.
Yes, but I will also admit that like I won't bat an eye at a 35% increase in my red meat prices, but that's me personally and how I choose to spend my money. I can understand that other people who are maybe not as financially set well off as I am, or other reasons, right? They have dietary restrictions. They don't like red meat as much. The price goes up that little bit. They're going to choose not to buy it, right? There's plenty of other alternatives. And hey, pork products are still buy one, get one free. So there's going to be somebody's going to start switching in their grocery cart is what I'm saying. And I think that will help at some point. We're also out of peak grilling season, and we're going into a holiday season where there are alternatives, right? We're coming up on turkey season here momentarily. Christmas might turn a little bit more into a ham this year or something. I'll still do roast beef, but people may change if that price tag continues to climb.
And you bring up a very, very important point. And up until recently, we had not seen this on these breaks. Little bit of weakness in box beef, but this week,
right.
Some pretty decent retracement, some retrenchment by the consumer or by the packers. That box beef not moving quite as well as it had been. Values coming down. Cash trade.
You know what, Joe?
Considering last week,
if it's going to continue to be stable, right, or stabilize, right. That's price discovery, right? You want to see box beef adjust, find its support as well if prices are going higher. So we're not making the ultimate case for why it has to has to top out here. We're telling you, hey, look at these markets in conjunction with each other, because in conjunction, they can tell you something about the broader narratives.
And so in a lot of talk last week that on that break there was commercial interest, and our inability to get back down to the lows of last week, to me, is telling in that there may be commercial buying underneath. And this is a non-delivery month. Our ADM cattle analyst jumping up and down very often, reminding us that in months like this, you can see the funds kind of take markets for, the cattle market for a ride. In this September, you pointed out absolutely rightly about there being a bit of a lull between grilling season and commercials building a pipeline for the holidays. I suspect that maybe what you saw last week with that commercial interest is that they are trying to get ahead of what they consider to be stout holiday demand for beef and meat in general. Time will tell, right? Whether or not that's the case. But the other point that I would want to bring up is that they're running out of September. It is already the 19th of September. And so shortly we'll be back in a deliverable month, and the funds will be bounded by that fact of having to make or take delivery.
Right. And that changes that price discovery, folks, into the delivery period, because remember, these are deliverable futures, and that's a big portion of how price discovery ends up equalizing at the end of a contract. In fact, it's the only way.
Go ahead. Absolutely.
No.
That's exactly right. Help me out. So what I'm thinking here about beans, I have gotten a bit concerned this week. And what I'm wondering is if I am going to be harvesting a bunch of soybeans and I'm not really going to have a place to sell them yet. Like, as you get out onto the western side of the United States growing area, there's some talk that some of those commercials are simply not going to be taking beans. If you're going to have to hold this stuff, are there levels here? Obviously, I know what we're going to do, but maybe you can explain it better, right? What is a simple thing that you can do if you want to put a floor in? Do you put that floor in November? Is that not enough time? Do you look at the January? Something simple that can help me and help our listeners think about what they could do to maybe mitigate some of what is a potentially risky price situation.
Yeah, there's I think the hopes that you can get something out and get some sales done out towards $11.40, $11.80, $12. Maybe that's an option you look out towards May through July of next year to sell on the call side. The idea that will help bring in some money to buy maybe protection through January or March of this year. So I'm kind of thinking use that time premium, structure plan sales out through. And this is, of course, assuming you got someplace to maybe store it, or you're going to keep it on hand, or you can't get it to the elevator. Like Joe said, things are backed up, whatever, or there isn't a processor. We got to wait a little bit. What do? Anything buying a $10 put in the near term or something to get a floor as high and tight between $10, $20 and $10 as you can, and turning around a little further out, selling a call to help pay for that. Selling the call is optional, but the idea there is that can be a planned sale if, in fact, the market does rally to $11.80, $12 by May or July. We should be selling some beans at that point, regardless. So it almost forces the hand in the producer to do that in their marketing plan. But selling that call today helps pay for the put and get that floor today, so that you can get a sleep at night and have some protection on between the first quarter of next year.
To be transparent, if we're using hope as our primary marketing strategy, we are hopeful that we can see higher prices.
And this is a way you can be hopeful with a floor and you can sleep at night, right? You can be hopeful that you have a roof over your head with that sold call and a floor with that put. So this is how you start building a house around that hope.
Your little hopeful house. Absolutely. And so for our purposes, our favored scenario is that we do get some sort of 11th hour agreement. The bean market continues to rally. Everybody's fine. They get some stuff sold. Maybe we get some government payments and everybody is pretty close to being okay. But if that doesn't happen and the United States authorities and the Chinese authorities continue to prosecute this trade war and these beans begin to stack up, that could be a pretty serious issue. And that $10 floor all of a sudden becomes very, very important, doesn't it?
Yeah, it really would, right? And it would be for, I think, a lot of people in a year like this, it could be the saving grace because interest rates, while we did see a cut, are still high. Banknotes can be high. Banks aren't being the nicest with lending terms this year, from what we've heard and chatting with clients as well. So, right, the idea there is that financially times are getting tighter. So having that plan and having something locked down is just of the most essence. And I know I wouldn't want to look at another $60 cent to dollar drop on the balance sheet for beans right now,
You know,
um, in any plan, particularly if we can do something to protect it today. But just putting it out there, since January is trading a little bit higher, I was going to price out the idea that, hey, January with 98 days left on it, a 10-20 put, rather pricey, settled today here at 18 and an eighth cents, just outright. Actually, it's probably not terrible, just outright in terms of protection. But that's basically protection at $10 through January, which would be still 44 cents below the market. That's a long ways off. So, okay, how can we help pay for that? I was looking further out, going out to May, which takes you 217 days, gets you towards, I think, the idea of whether or not we'll have a late plant or not, to get a good rally under the crop for at least that first weather market. 1180 calls, we're going for 16 cents. So you can get a dollar above today to have a potential sale, a dollar above today in May, and almost pay for that floor through January, through the end of January there in the market. And this is just one idea for producers to put what is referred to as a risk reversal or a collar strategy on that help finance the paying for protection today with a future sale of the commodity that we produce on the balance sheet. It's a very lock, sound, tight risk management strategy. Of course, in and of itself, you're short a call and long a put, so you are effectively looking for downside price action. But if you want to discuss what a marketing plan with these types of ideas can look for you, give Joe and I a call. That's what we're here for.
this is the face that I make when I think about selling overhead calls in the bean market when you're talking about the possibility
I know, right? Trade deal, like
right,
what?
trade deal. But you know what? How about, wouldn't it be great to have 1180 calls be a problem? Wouldn't you like to receive calls from folks that we help put this strategy on, saying, okay, genius, what do we do with this 1180 call now?
And you know what? As the
Know
narrative
exactly what you do with
changes,
it.
Joe, we can talk about reownership strategies too.
Absolutely.
That's the great thing about futures, is that you don't have to be married to a position. You can literally have zero risk or zero delta at any given point in time. And that's okay too. Sometimes that's appropriate. And in a market like this where we just don't know, maybe that's the right decision.
Amen. Amen. Dan, how about a question of the week
Of
from
the week.
producer Carter? Question of the week. Are you someone who is prone to retire early, or would you call yourself the night owl?
So, like, you're talking about just at the end of a day, I prefer to stay up at night working on a project or getting up in the morning.
Dan, I'm certainly not talking about some
Yes.
tequila and Coors Light fueled bender that somebody might
Yes.
experience on Commodity Classic. I'm not talking about that.
I'm a
You're
little
supposed
bit
to
of, I feel like I'm a sleep when you're dead type. I'll burn the candle at both ends. It's a much problem. I don't know. I get up early and work out a lot. I like to stay out late and have a good time too. So, yeah, let's do it all.
with me
I'll sleep
being
when I'm dead.
37 and a half years older than you, I would prefer to be in bed at a reasonable time and awake at a reasonable time. But sometimes the circumstances just don't allow for that, and a guy tries to do the best that he can, don't we?
It does. It does. Well,
Yep, that's
everyone, that wraps it up for this week. Thank you for listening to the Zaner MarketCast. If you need more,
Thank you.
just can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge or on LinkedIn and Twitter at the Zaner Group. If you have any questions and you'd like to hear answered on the show, there's a link in the comment section and information section to fill out and do just that. We'd love to hear from you. Also, sign up for Karen's newsletter or Ed's call in. All those links are available. Thanks for joining us. And if you've liked what you've seen here today, please be sure to leave a comment, follow along to not miss a beat, and we will be back with you as price action develops. Take care, everyone.